Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. And this is the third part of a four-part series on the Oklahoma state foreclosure process. Every state is different, but in this one particular respect, most of the states are like what I'm about to tell you, which is what we call phantom income or 1099 income that comes from a foreclosure. Now, what we talked about in a previous video is deficiency judgments, judgments where the lender can go after you for what their loss is, and regardless of what size of the loss, it's 50,000, 100,000, a million, then they have the right to sue you for a deficiency judgment. But what people don't understand is also that lenders typically send a 1099 income statement to the IRS. And it's called forgiveness of debt, although I think that's a really bad term for it because there really is no forgiveness. What this means is in that $50,000 or whatever the deficiency judgment is, that is also a loss that they send to the IRS in 1099 income, which means that in that year, even though you didn't earn that money to the IRS, you did. You made $50,000 or more, or whatever it happens to be, in income, and that is income that you haven't paid taxes on. Now, there's a lot of ways that we can help you avoid deficiency judgments in a foreclosure, and maybe they will or they won't go after you. But one thing that we know about the IRS, if they have a 1099 statement that comes from anywhere, from your job, from taking money out of a simplified employee pension, tax deferred, whatever it happens to be, you have an obligation to pay taxes, and they are going to go after you, and they are going to get their money one way or the other. If it means taking money out of your bank account, if it's garnishing wages at your work, they will get the money. And so 1099 income is a fact of life in the foreclosure process. Now, what I've said in our short sale videos before to people, if you do a successful short sale, there is a law in the books that says that the IRS cannot get money from you, that you are exempt from 1099 income. Now, this is running through the end of next year. So if you're a distressed homeowner financially and you're trying to find alternatives to avoid foreclosure, phantom income tax is a pretty darn good reason, because this can have a really bad effect on you and your family in terms of going forward in the future. It means that that foreclosure process is not over, that it's continuing, and it can continue for a long time. Because remember, not only do they get an income that you didn't pay taxes on, but as long as you don't pay it, they're going to be charging you interest and penalties. We want to avoid that, and we are here to help at the Virtual Real Estate Team. If you need more information, go to avoidforeclosureoklahoma.com or contact me at joe@joepryor.com. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.